So, guys, today's goals it's to learn what is a balance sheet, what are the main elements of a balance sheet, learn what is an income statement, what are the main elements of an income statement, and learn to generate an accounting ledger. Guys, please be very attentive to this first month. If you don't learn this first month, you will have troubles afterwards. So, and it's the boring month. Sorry about that, but I don't like this part. What comes next is way better, but we have to start with the boring part. What is the balance sheet? A balance sheet is a financial statement that reports a company's assets, liabilities, and shareholders' equity at a specific point in time. At a specific point in time is very important, guys. You don't request a balance sheet from from today up to the next day. The balance sheet contains all the registers, all the ledgers, all the accounting transactions since the beginning of time. It's like your bank statement. Have anybody of you, do you have debit cards, credit cards?
Yes.
Okay, it's like your bank statement. Your bank statement contains all the transactions since the beginning. You will see a first line or rather than give you a bunch of 20 pages of bank statement, they put in a line your balance from the last month was this amount, and then you start the bank statement. Why do you put that balance? Because you're recording all the transactions since the beginning. That's why you request a balance sheet at a point in time, not from. So the balance sheet has assets. Guys, these definitions. You will have to learn 6 definitions. Assets, liabilities, equity, income, cost, and expense. And remember, my goal in all the courses that you will be able to understand what is an asset, liability, equity, income, cost, and expense. If you learn Monte Carlo simulations, company evaluations with me, I'm okay with it. But my main goal is for you to understand these 6 topics, okay? Liabilities are debts and equities are the people who possess the right for the economic benefits of the firm. Okay, what we just talked about, okay? What is an income statement? An income statement is a financial statement that shows you the company's income and expenditures. It also shows whether a company is making profit or loss for a given period. The difference between a balance sheet date and an income statement date is that the income statement you request from this date until this date. You request periods of times because you want to evaluate periods of times. The balance sheet has or contains the register since the beginning of time. The income statement you requested in periods of time. And this part, guys, is where almost all the students start getting a little bit lost. The income statement is part of the balance sheet, okay? You will find the same result that you will have in here in the income statement. If you have 100 of earnings, you will find that 100 of earnings in the equity section of the balance sheet. Remember, the income statement, it is part of the balance sheet in the equity section. What we are doing in the income statement is to provide a little bit of deepness in the analysis of that account. Remember, in the equity, you have profits and earnings, okay? And you will see only 100 in that part in the equity section. But in the income statement, you will have 200 of sales minus 100 of cost and expenses, earnings 100. It's a detailed view of your profits and earnings because the investors want to see how much they collected by operating in the company and how they spended that income, how the management spended that income. That's why we provide a full view of that account. What are the elements of the income statement? Revenues, the mechanism where the income enters the company. The revenue is given by the operation of the company. If your company sells cell phones, your income will be given by selling cell phones. Okay? One important message, guys. I know you will have trouble with this one, but don't learn by name all the accounts. The accounts change their name. We don't have a standardization for the name of the accounts. We have a standardization for the purpose of the accounts. Some in the United States or in UK, revenue, they call it sales, or they call it income, or they call it revenue. Okay? In Spanish, what's the name of that account?
Ganancias.
Nope.
Of which
Sales
one?
is ventas.
Yes.
But as I'm telling you, somebody call it ventas, other ones call it ingresos. Don't get lost with that. Learn the purpose of the account. Don't learn the names. Learn the purpose. The structure will be the same. In all the balance sheets will have the same structure. All the profit and losses will have the same structure. So if you know the purpose of the account, you won't be lost if the name is called whatever, okay? So expenses, what are expenses, guys?
The cost of operating the company.
Yes, exactly. And what's the difference between a cost and expense? Venga, Dome, un cafecito. What's the difference between cost and expense?
I think that a cost is more related to like the price or like the assets, and an expense is what's are you going to expend on or something like that. I don't know how to explain.
The cost is related to the income, to the sales, okay? If I sell cell phones, because my company provides cell phones to users, what are my costs? Give me examples.
For example, the machinery you use to build the phones.
The machinery, what it's machinery is an asset, guys. It's a resource, okay? Give me other examples. If I sell cell phones, what cost do you see in a cell phone?
The
Because
cost
production,
of,
production cost.
The production cost.
for
Perfect.
the infrastructure.
Exactly. Well, all the infrastructure, all the hardware, all the production process,
It can be salaries.
the salaries from the manufacturing process.
Investigation.
The investigation process is related to the sale process.
Not complete.
Advertising.
So would you do it? Would you do it as a cost or an expense? Where would you see it? The investigation process.
That's an expense.
That's an expense. Okay. The advertising. Danny. It's hard, but the most common aspect is that you will see advertising as an expense. Because what you advertise is not only to sell a cell phone, no? You advertise Samsung that sells cell phones. Not only this one, right? So you
But
are
this can
selling
also include in sales.
what?
This can also include in sales.
I get you. I get you. It's a complicated aspect that you could say, because I've seen it. I've seen it. Some companies choose to put to allocate the advertising as a cost. I would just investigate what's more beneficial for your company. Most cases I've learned is that you will see it as an expense. Okay.
Yeah, I've
And it's
done income statements before, and we put marketing or advertising into something in a category called selling expenses.
expenses. Yes. Yes, but Danny has a great point. It's viable to put marketing expenditure because it's related to the sales process as a cost, but only that advertising, guys, don't lose that. The main message is that why do you put at the end, cost and expenses are almost the same, okay? Why would you differentiate the cost from the expense? Because you want to learn the gross margin. What is the gross margin? You want to figure out your gross margin. You want to figure
It's
out
the money you get after all the expenses, right?
No, that's the operating margin, Jorge. You will see it.
So the gross margin is when you take the amount of the final costs, I think it was, and then it's between the cost and the amount of sales.
Exactly. Only sales decreased by the cost, not the expenses, guys. Why would you want to see that? Because I want to know the profitability of my products. Why? Because if I have a profitable product, then I can adjust the level of expenses that I need to in order to be a profitable company. Okay? If you have a profitable product, if you spend more than you're earning, you know that the management may have some issues in taking decisions or managing the company, because you're not earning enough. Why are you spending that much? We will get into those kind of analysis, guys. But that's the important aspect of why you want to know or figure out what it's cost and expense. Those are very, very different issues. So what is accounting? The action or process of recording financial transactions based on the criteria of the previous questions, and the criteria is established by an accounting principle. In here we will follow IFRS because it's the international law for accountants. Okay. Nature of accounts, guys. This is what I wanted to show you, so you can respond to the assessment quiz properly. The nature of accounts, you will have to figure out this table. Please learn it. If you don't understand it, I would prefer you that you will understand it. But if you don't want to understand it, learn it by memory. You will use it your whole life. The nature of accounts, what the nature of accounts tells you is if you have the double partida doble, no, in the accounting system, you will have a debit and a credit. The nature of accounts tells you if the element of the income statement and the balance sheet increases or decreases with the debit and the credit. Okay. At the end, with the word increase, that means that the final balance of that account should end up with that nature. I will give you an example. All the asset accounts should end up with a positive balance. Why positive balance? Because the debits are positive and the credits are negative. All the liabilities should end up with a negative balance. The income, what's the nature of the income?
Credit.
Exactly. And what's the nature of a cost?
Debit.
So in your accounting system, guys, if you record a sales or income in your accounting system, what nature it will have?
The income will have a credit.
So the income are positive or negatives?
Positive. Because you cannot have negative incomes, right? It wouldn't be an income.
That's why I'm showing you. This is like the most confusing aspect. I think, Dominica, that in this part you got lost the last semester, and it's the trickiest part. It's the trickiest part. That's why I'm telling you, please learn this one. Credits are negatives, Jorge. So the income in your accounting system will be positive or negative?
Positive.
No, they are
Let's.
negatives.
Yes, they are negatives. They are negatives.
The incomes.
Yes. Hold your horses. I will help you to understand. I will help you to understand. Liabilities are positives or negatives? Liabilities, Manuel, positives or negatives?
Negative.
Exactly. Guys, whenever you see a negative in your accounting system, that means that you owe something. Okay? What? Does that mean that I owe the income of the company? Yes, you owe that. To whom?
Though it depends for the provider.
You might owe something to the provider, exactly, Jorge. And at the end, if you don't have debts, to whom do you owe that money?
To
Who has
the
the economic rights?
shareholders.
To the shareholders. So the incomes are debts. That's why you see income in a negative sign in an accounting system. But if I sell this cell phone for 100, do I pay 100 to the company, to the shareholders, sorry?
No.
No,
I have to subtract what?
the dividends.
No, don't get lost with the dividends. If I sell this cell phone for 100, I have to subtract the cost and the expense. And I pay that difference, what it's called utility, net margin. I have to pay that difference to the shareholders. Do you get it?
Yes.
So the costs are negatives or positives? Analyze it. If the income is negative, the cost and the expenses in order to subtract the income are positives or negatives?
Positives.
Obviously. In an accounting system, the expenses and the costs are positives. So you have that the assets, the cost and the expenses are positives. And the liabilities, the income and the equity are negatives. This is one of the main issues that I have with my with the students, that they get confused. Okay. The other issue is that this doesn't mean that in an accounting system you won't have a credit in the asset. You will have credits in the assets. The message in here is that you will, at the end of the day, the final balance, when you record all the transactions that you need to record, the final balance of the assets will be positive. If you have an asset with a negative sign, you have something wrong in there. If you see a liability with a positive sign, there's something wrong in there. It has liabilities, must be negatives. Okay? Until here, do you have any question? Learn this table, learn it, live with it. You will use it your whole life. You will see it in bank statements. This is a chart of accounts, guys. This is a very standard chart of accounts. It means whenever you record or you have an accounting system, you need to provide a chart of accounts. These are the accounts that you use in order to record accounting transactions. Would you need to learn it? No. I'm just showing you because you will use it, but we will see it in a very easy way. I won't make you accountants, but I need you to understand how to record. What you will need to understand is how to record 6 types of transactions: assets, liabilities, equity, income, cost, and expense. Sorry, no, this is not 6. This is 6. Okay? 6 things, guys. So let's see some examples of records, okay? What you need to figure out at the process that you should be analyzing is that for every debit, you will have a credit. So we need to figure out from every economic transaction, what's the debit account and what's the credit account. That's the whole course. That's the main goal of the whole course. I created a new company and finally got my bank account. Today, I did a deposit into that account with the first batch of cash funds in order to provide working capital to it. What's the debit account?
The bank account.
Why bank account?
Because it is an asset that increases by debit. So your deposit, yeah, right. Yeah, and the asset increases by debit.
Are you watching the nature of accounts chart?
Yeah.
It increases with debit, but what's the definition of the asset? The first thing to understand is why is an asset? What are
Because
assets?
think that the bank account is something that the company owns.
It's a resource for the company. Can you use
Yeah,
it to
exactly.
generate?
It's good for the company to have it because it can
It's a
generate.
resource, exactly.
Yeah.
And resources increase with debits, correct? But we're missing the other part. What's the credit aspect?
The credit is the
Who provided that cash fund?
shareholders.
The shareholder. Because it was my company, I provided to my company a cash fund. So the credit aspect
Less
is,
money for the equity, right? For the shareholders.
so the credit aspect is
Uh, increases
account name,
equity.
excellent, equity. And equity increases with credits.
Yeah.
So we have bank and equity. Everything checks out. Okay.
Yes.
Did you respond to that in your quiz?
No, I think I had it wrong.
Take a look, guys. Are you watching my quiz?
Yes.
Debit to my asset cash account and a credit to my equity social capital account. Okay. I did a credit sale. What is a credit sale, guys? Just to be in the same understanding. What?
Income.
Why income?
Because it's the money you're getting for
From
selling
your
it.
operation, from the operation of the company, from the purpose of the company. If I
Yes.
sell cell phones, that's a sale. Okay.
Yes.
Or income. So if but what is a credit sale?
Uh,
If I sell this cell phone on a credit sale, what does it mean?
it means como de contado. No, right?
No, it means a crédito.
To payments.
Yes, exactly. You're giving somebody's credit
Yes.
in order to pay in the future. Okay?
So that's, for example, account receivable.
Exactly. Why it's an account receivable? I
Because
don't need
it's
you to, guys, please don't give me the account names. I'm asking what's Don't give me account receivable name or banks.
Okay.
That's the account name, okay? What I'm figuring out with you is if that's an asset, liability, okay?
That's an asset for the company.
Why? What
Okay.
is the definition of assets?
A resource.
Exactly. What's the resource
The money you're getting for
that you will get in the future?
yes.
Exactly. Okay. So we debit because we want to increase that asset.
Uh-huh.
And in the nature of accounts, assets increase with debits. And what's
Yes.
the credit aspect, guys?
Income,
Why income?
because it's money that the company is getting. So the money
The money,
left,
it's not the money because the money is a resource.
well,
Remember that by definition, the income is the sale process of the company. Did you sold something? Yes,
the phone.
the phone. And the income increases with credits. Okay.
So to summarize this up, the debt for the client, well, it's the asset for the company, right? With the increase
Come
by
again,
debit.
come again.
The debt for the customer, because he has money left to pay because he paid it on credit, it's the asset for the company, the account receivable. So
Exactly. From
increase
the
by debit.
customer perspective accounting system, you will see that as a liability.
Exactly.
And for you as a company that sold that cell phone, it's the right to claim that debt. Okay, the right to claim.
Yes. And you also are getting money for that sale, right, which is an income, which
And why
increases by
it's an
credit.
income? Because somebody's gonna give you 100 pesos, no, for that cell phone. But
Yeah.
is that a resource for the company?
No.
Yes, the 100 pesos, yes, because you have that resource. But you still have an obligation, no? What obligation do you have to pay that income? To whom?
Yeah.
To your shareholder.
Yes.
Okay. So it's not like the company should be using those 100 pesos if you wouldn't have any other transactions. Obviously, from that, you will have to operate, to pay salaries, to pay rent.
Taxes.
That's why you deduct them from the income and you pay the difference to the shareholder.
Yeah.
Okay. But if you only have that transaction of I sold 100 from this cell phone and I collected those 100 already, the customer already paid me. So I have 100 in here and 100 in income. What would you do at the end of the year? You will have to pay those 100 from your bank to the shareholder. You will have bank 0. And do you owe something to the shareholder?
Yes.
I already pay him.
But how much money you owe to the shareholder, it depends on by a contract or something, right? You don't have to pay them all of the money you have left, for example.
Come again. Come again.
But I was saying
Interesting
is,
question.
yeah, so the money that you have left, you don't have to pay all those money, all the money to the shareholders, right?
No. You don't have to pay. In this same example, if I sold 100 and I owe him 100, the correct process would be I have to declare dividends maybe he wants to be reinvest in my company. Usually it's that's a form called retención de dividendos.
Yeah, they don't pay the dividends, they use that money to
To
invest.
reinvest to keep growing. Okay. That's why you don't pay utilities, or you don't pay the net profit of the company.
Mhm.
That's why you pay dividends, because the dividends is, once you have your net profit, you retain something of that profit and you pay dividends.
Yes.
Okay, that's the difference between net profit and dividends. We are almost done, guys. We're almost done. And the whole first month, we will be recording in order for you to understand all the economic transactions and how you will do assets, liabilities, and everything, okay? So if you're a little bit lost in this session, don't worry, we will keep practicing. So from the previous operation where I sold 100 to be paid in the future as it was a credit operation, the cost of that operation is $50 to be paid in the future. My accountant registered. And of course, there was no inventory involved in this operation. I sold this for 100, but in here it's telling me that this costed to the company $50. What's the accounting transaction?
That's an expense, right?
Remember the difference between cost and expense. Is this related to the selling process?
Yes. Well,
So it is a cost.
yeah, it's the cost of operation. It says in the
Debit or credit?
That's debit.
Perfect. And the credit, we're missing the credit.
Would be liability.
Why liability?
Because it's money that, well, I'm not sure it's a liability.
It is liability. Why liability? What
Because
is the
it's
concept of liabilities? Remember,
debt.
guys, you have to do the same process. It's the account name. First of all, the account name. What is the concept that better justifies this economic transaction? We have something that is closely related to the sale process. If I sold this for 100 and this costed me $50, this is your cost. The cost increased with debits. I'm missing the credit aspect.
Yeah.
Did I pay for this 50 USD? No. In the example, in the exercise, it's telling you that you haven't paid, but you still owe that, no?
Yeah, it's a liability.
Why liabilities? What's the concept of liabilities?
Debt or something left to.
Debts, exactly.
Yeah.
Perfect, guys, perfect. Almost done. Today I received a wire transfer of $100 from my customer and I took. Now let's review that with the accounting exercises for the next week, okay?
Okay.
So guys, that's it for today.
Hey, I have a question. Next week we are going to have our online class and